Multiple time frames, part 2. In this section, we're going to look at multiple time frames from a longer term perspective for core and swing trading. Just reviewing a little bit of what we've talked about already. Multiple time frames, when we're looking at them, what we're doing is we're expanding data and compressing data, and we're going to see a different arrangement of candles. So we may or may not see the momentum slowing or the actual turn. I say there's no way around it. We don't want to look at too many time frames, so we may be entering after a larger bar. And by using multiple time frames, we'll understand what we're doing, and there'll be times where from a smaller time frame it may actually seem that we're chasing. However, by understanding the higher time frames and what's happening, as well as the addition of money management, we'll be doing just fine. And we could be then moving down to a lower time frame to adding at the appropriate time. So when our higher time frame, or our primary time frame is whippy, which will be confusing, we can then move to a higher time frame and compress that data, and it should bring clarity to what we're seeing. If not, we just don't trade. Now, if things are climactic, we then stand aside and wait for pullbacks. So here we have a monthly time frame. And what's happening here is we have a move up and then this long period of consolidation here. And you can see this is happening over the course of years. And the same concepts are going to apply. Exactly the same, just we're applying them to a higher time frame. And in this case, we have a bullish consolidation at supply or resistance. This prior high right here is where sellers came in, and this is a pretty sizable pullback going from 38 all the way back down to 24, coming up to this resistance here, retracing, which eventually became a higher low, and then push up, and then about a year or so of consolidation there, and a move up. And this is what it looked like on the daily time frame. Here you can see the blue stars. Here is the pullback, and of course on the daily time frame we have a break under the moving averages and down to this area of support where buyers begin to come in. Prices are chopping around, and at that point we really don't know whether it's going to drop lower. It certainly could have. Remember, here's the red bar, and that's this downward move right here, and that could have resulted in a move down here. However, looking at the daily time frame, we see the retracement and the pullback here and the bottoming tail. So we're seeing an improvement in the price action and buyers beginning to step up, and then a push up toward the resistance area here. Take note of the bottoming tail bar. We know that was a big wide range red bar. Prices come back up. As we're looking at these individual candles, it tells us that there's strong demand and buyers are stepping up. And also look at this move here, this momentum move which creates the void. And it consolidates, which creating support here and the bottoming tail bars. And then as prices begin to move up, we have time frames coming into alignment with each other. So here's the monthly chart, and now we're looking at it from a very long-term perspective, and big move down from year 2000, and it's a very long period of time of doing nothing, and a move up, and it's the same choppy consolidation that we were looking at on the prior slide, and then here's this huge breakout. So this price action here was suggesting bullishly that prices would break out, and as they did, but we want to get in over here. If we're looking at this pattern, why would we do that as it started to break out? Well, there's this huge void and gigantic bottoming pattern, as I had said. So taking a look inside and getting a perspective here after the move started, and that is a great exercise in of itself, going back in time and seeing what things looked at. Because over here, this looks like really not much was going on or not much of a move. But in reality, based on what was happening here, the move up, which we just looked at, you can go back on the video and look at it and get another perspective and see what it looked like in the bottoming tail, and then the consolidation and the breakout. And here it moves up, a little pullback, and so on. And at this point, obviously, it's getting a bit extended. However, this is where we gain a bias from. This, at the moment, has a lot more room to go, potentially. And as time goes on, we look to buy pullbacks in the smaller time frame, and we apply the trend analysis that we've gone over, looking for prices to pivot and pull back and create new areas of support, and to see that this bullish bias from the monthly continues in multiple time frames. All right, so let's look at a few more examples. We've got the foundational concepts down and what to look for. And how do we gain a bias here as to what's happening? So we can now apply biases from different time frames and keep things in perspective from longer time frames. So what we're looking at here is a situation where a monthly is in a downtrend. Do we want to buy this from the monthly time frame? Absolutely not. Can it go higher and have a substantial move higher? Absolutely. So as it comes up into this resistance area, clearly we then think, well, enough's enough from the smaller time frames. Whereas the weekly has pushed up above resistance here, and it has room to go higher. And now look at the daily. It's up above the moving averages. It's consolidating here. In other words, do I want to buy a breakout looking for prices to go higher? Sure. It's improving here. Price is gapped up. It's creating support. It's above the moving averages. It's got room to go higher. But I know I'm not going to stay my welcome too long. But from this perspective, can I swing trade it? And yes, and the odds are in my favor. But I know that where the potential is and where it's likely going to stall. Okay? So swing long is okay, only. All right, and look at another example. Monthly breakdown would have been great to be looking at this here. How do you catch these? Well, you got to scan the monthly time frames and get a bias. And here we had a big head and shoulders type of top, and it broke down. And this is where we'd be looking for short setups. Now, the weekly is still in a downtrend. There's a void below. The daily's in a downtrend. All we want to find here is shorting opportunities. So a base, and this isn't a very mature base at this point, but if it consolidated for a while, we could then sell a breakdown. We might get a retracement into the resistance, the minor resistance area, to sell it short as well. Okay. So we don't neither here. So as I said, stand aside. So here's prices breaking to the downside here. Got room to go down. It's extended on the daily. The weekly is also extended, so we just want to stand aside from this. Do we want to core swing this? Well, the monthly here, it's a little extended. I've got a nice turn. We have a correction going on the weekly and this consolidation, but it's really pretty sloppy. And the daily is also sloppy. It's improving. I'm not sure where this is going to go at the moment. So it says it could be both, but things have to tighten up. It's just too sloppy here. So let's wait for it to consolidate and gain more information. All right, swing trading and opposing trends. Well, look at the weekly, and it's in an uptrend. It's pulling back to minor support. Prices are beginning to reverse. That looks pretty enticing for a turn and a move back higher. Now, as I go down to the daily time frame, it's in a downtrend, but it's beginning to transition. You can see the move down and the retest, wide range bar up. Don't have the volume here. Red bar, I'd like to see this consolidate a bit more, but it's very interesting. So it'd keep this on our list, looking for the daily to begin to tighten up, to be a buyer, which would be in alignment with the weekly uptrend. So ideally, this would be a base a bit more, but the weekly stop makes the entry okay. Meaning, if I put my stop down here with the proper money management, it would be okay to be a buyer and giving it room, waiting for this to develop, and then looking to add. Weekly time frame, retesting in a downtrend, and it's beginning to transition. Note the breakdown failure here, the retracement up into resistance, and then coming down to retest. And on the daily, beginning to turn, you can see the turn right here, the green stars, and the move back up. So here would be looking to buy this transition, right, from red to green, looking for prices to move higher. Swing trading with the trend. Here on the weekly uptrend, prices are retraced back down to the bottom of this wide range bar. It's certainly not ideal, and it is definitely a concern. The angle of retracement was sharp. However, it's in an uptrend at minor support. Looking at that, the trend has to be our primary focus here in providing our bias. As I said, this pullback to this level is a bit of a concern because it's retraced the wide range bar. Think about what would be the ideal when we see a wide range bar. And I've covered that a few times. And that would be a sideways consolidation at the top of the wide range bar. Now, going down to the daily, it's into a gap fill. We have a pivot right here where it pivots and creates some support. Then we get a retest, making a W type of a bottom. 50 MA is also in this area. The 20 MA, while declining, is just a line that we put here. And overall, this pattern is one telling us that buyers are stepping up and it should be able to move higher. So we would be a buyer of this, knowing that it can move up substantially. It's going to stall over here. The weekly's in an uptrend. It's not likely to take out this high without a period of chopping around when it gets here. Now, we make some assumptions when we look at these patterns. Those being, as I explained, this type of retracement, the angle, the retracement to the wide range bar. And when it gets up here, it's likely that it's going to stall. It doesn't mean it can't get through it. It just means that when it gets there, we're probably going to sit through some choppy consolidation. We might want to tighten stops, reduce part of that position, and then we just manage it accordingly. All right, let's go to multiple time frames, part number 3.